Well, welcome back to our questions and answers. I didn't know that's what this was going to turn into, but it sort of has. So I've gotten 5 really cool questions. So let's proceed. Let's get some answers.
Is it better to pay off my mortgage or invest my extra money?
Well, I'm not a financial analyst or a financial person. That's probably better answered by someone who is your financial person. But generally, if you're going to make more interest on the money coming in versus what you're paying out, you should probably be investing.
Can I transfer my mortgage to somebody else?
No, you can't just transfer a mortgage. If a mortgage is assumable, some FHA and VA loans are. A lot of them are a lot older, but that you can assume someone's mortgage, but you can't just transfer a mortgage to someone else.
How do I get out of a joint mortgage after a breakup or divorce?
Well, unfortunately, you're stuck. There's no getting out. You can always quit claim and take that person off the title. But that doesn't really make sense for the person getting off the title because they're still stuck with the mortgage, but they don't own anything. So a lot of times that doesn't work for most people. So you basically have to refinance, unfortunately. There are some caveats to that with VA. If you have questions about VA, you can call me and I can answer that. But for the most part, you have to refinance and requalify all on your own without the income or the debts of the other person.
Can you get a mortgage if you have student loans?
Yes, there's nothing specific about a student loan unless it's in default. Then you are in default of a government loan, so that could be an issue. But student loans are held against you just like any other debt. What I do suggest is if they're deferred, they have to be deferred for a long period of time, which most of them are not. And by long period of time, I mean 3 to 5 years longer. Most of them are not. Most loans are deferred for a year or 6 months. So what we are going to do is we're going to take a percentage of that loan or that amount and give you a monthly payment, and we're going to hold it against you. What I suggest is if you're done with school and you know those loans are coming due in, 3 to 6 months, maybe even a year, go ahead and call them, set up a mortgage payment, or excuse me, a loan payment. They can lump all those loans together or a lot of them and make one loan payment. And generally, you can get a lot lower than the percentage I'm going to take and hold against you. So always contact your student loan provider, see what they can do to help you with making lower payments. That way your debt to income is lower and you qualify for more.
What happens to my mortgage if my lender goes bankrupt?
You still have to pay your mortgage. Unfortunately, that doesn't go away. That's a lien on your property, and the lien does not go away just because the mortgage goes bankrupt. They're still collecting that, or their attorney is going to be collecting it, or the judge is going to have somebody collect it, or even a new company that takes over is going to be collecting that. So always make your payments. Don't fall behind. That lien is not going away. And if you go to sell your home and you haven't been making payments, that lien has to get paid somehow. So definitely make your payments. You're still stuck with the loan. So again, if you've got questions, give me a call, 239-789-7561, Dawn Hall, Van Dyke Mortgage, or put a comment in the bottom. Love the questions. Keep them coming.